Hello, this is Mike Swanson, Wall Street Window. This is April the 8th, 2018. I want to give you an important stock market update. I'm going to show you 5 doomed stocks and then talk about what to buy. Doomed in the sense that they're in a dangerous technical position on their charts. First of all, let's take a look at the New York Stock Exchange primary index, NYSE. I like to look at this sometimes instead of just looking at the Dow, which is 30 stocks, because this is basically every single stock in the market. It's even a broader based index than the S&P 500 and the NASDAQ 100. And as you can see, this did go up just like the other 3 major indices did in January, and then it dumped. But today, it's below the turn-day moving average, not far from the lows of February. Now, the S&P 500 is still above the turn-day moving average, so is the Dow, so is the NASDAQ, although they all appear to be approaching that level. And that level defines a bull market. It acts as support in a bull market. In a bear market, it acts as resistance. So we seem to be in some sort of transition phase in between a bull and bear market, which is causing wild stock market volatility and swings to start. Now, as you can see, this composite index barely bounced in February and March, when the NASDAQ actually made a new high during that time. That is another indication that that rally in March was actually narrow-based, led by 2 or 3 dozen big-cap tech stocks, bank stocks, all of which, though, have turned down sharply since that March peak, and in many cases are leading to the downside. One example of this is Facebook. Facebook really dumped when the market topped out in March, and it's completely broken down. Now, the turn-day moving average, the green line, is way above the price of Facebook. Facebook is now a stock market laggard. Now, what I want to point out to you, though, which is important to look at for other stocks, is Facebook was actually lagging the other 3 market averages before the March dump. If you look at the bottom of this chart, you can see a relative stock plot. This is an indicator created by comparing the price of Facebook to the S&P 500, dividing the Facebook price by the S&P 500 price. When this indicator goes down, it means Facebook price action is lagging the action of the S&P 500. This indicator basically began a downtrend in November, and that continued into this year. Even though Facebook made a new high in January, it failed to make a new high in March when the NASDAQ did. What ends up happening with stocks is when they lag the market averages and then there's a drop in the market, these stocks tend to dump. They tend to lead to the downside. When they lag on the upside, when the market turns down, they tend to lead on the downside and fall much more than the stock market. So stocks that lag while the market's going up flash a potential warning sign that, hey, this stock could really dump when things turn down, and Facebook did that. And now there are other stocks in a similar situation that Facebook was before Facebook dumped. And I'm going to show you 5 of them right now. I call these 5 doomed stocks. Now, these stocks also have another big problem that even Facebook did not, and that is their on-bounce volume indicator is also trending down. I'll explain what that is in a second, but if you look at Broadcom, which is in the NASDAQ 100, you can see the relative strength plot is in decline since November 2. It's basically hanging on support, the February lows right now. If it breaks support, I fully expect this stock to tumble, just like Facebook tumbled when it broke down. But even worse than Facebook, as I mentioned, on-bounce volume is trending down. Now, what's on-bounce volume? On-bounce volume is an indicator created by making a running tally of the up volume days subtracted by the down volume days. Basically, when the stock is up, you look at the volume and you add that. So it does 1 million shares of volume and the day's up. Okay, plus 1 million volume. If the day is down, it's a subtraction volume day. So say the stock is up one day on 1 million shares of volume, plus 1 million shares, okay? And then it's down the next day, and it's down 500,000. Then you subtract that 1 million by 500,000, you have a running plot. When this indicator declines, it means on down days there's more volume than there is on up days. It's a sign of distribution. This stock the on-bounce volume is sharply breaking down. It's a critical warning sign that support is likely to break down. Combine that with the fact that relative strength against the S&P 500 is in a decline. This is a danger stock. This is a stock that if the stock market were to break its February lows, it's likely to lead to the downside. In fact, it fell 3% on Friday when the other market averages weren't down 3%. Another stock is Cerner Corporation, also in the NASDAQ 100. It actually already broke the February lows, but it's likely to even speed up on the downside. Relative strength is in a sharp decline since October. On-bounce volume trending down. This is another doom stock in the NASDAQ 100. Very dangerous. Another stock that I think is in danger of cracking is Skyworks Solutions. I know it's been a popular stock on some of the CNBC shows, and talking heads like it, but I don't like it at all. I think it's very dangerous. Relative strength in a sharp decline since November. It's basically hanging on to support at the February lows, about $95, closed right on it on Friday, and on-bounce volume is trending down. Another stock I got to point out to you is Charter Communications, also in the NASDAQ 100, also already below the February lows, already below the December lows, already below the October lows. You can see relative strength sharply trending down as a result, but on-bounce volume is trending down too. This is a stock that's crumbling, a stock that barely bounced last week, and the stock market rallied for about 4 days, and it's likely just to continue to lead on the downside. Even if the stock market goes up, this stock can easily continue down. Another stock in a dangerous situation is Checkpoint Software, also in the NASDAQ 100. It's below, well, not, it's touching the March lows, closed right on it, support around 97.5. Its relative strength completely broke down in November when it had a bad earnings report, but on-bounce volume has been steadily in decline. It's a stock that could easily tumble on its next earnings report or on a downdraft in the stock market. The point is, we're in a moment now in which the market is experiencing wild volatility. It just seems to be heading towards support. The 200-day moving average of S&P 500. Maybe it can hold that. Maybe robots can come in and buy again like they did the other week, like they did in February. But it seems that ultimately we could easily break that. It doesn't necessarily mean the stock market's going to crash, but what it does mean that stocks that are in bad situations are likely to tumble. They are likely to dump very hard. And I think if you own individual stocks, which I do, it's time to evaluate each single position and see, is it lagging the stock market? Is it experiencing declining relative strength? Because stocks in those situations are stocks likely to get banged up very bad in the coming weeks and months. And it's time to be cautious. It's time to reduce risk. It's time to trim positions in bad stocks. These are 5 stocks that are doomed, but they're also 5 stocks that I think you should use as examples to look at other stocks you may own and see, do they have these characteristics? Or are they displaying positive relative strength, positive on-bounce volume? Because while the stock market can be in a position to decline, while there are certain stocks that are, I think, likely to break down and are doomed, there also are sectors and individual things that can break away from a decline in the stock market, and situations where you see things displaying positive relative strength during weak times in the stock market, either if it's a couple of days or a couple of weeks, and they are in a situation where they can break away and lead the stock market for the rest of the year. And that's what I'm watching now very closely, and we'll be updating you about on these type of situations in my email update. So look out in the email update box for that, for more of my trading strategies, and I'll be talking with you